weekly business update. And as always, we need to tell you that eTruckBiz is not endorsed, sponsored, or anything else by FedEx Corporation. As most of you know, eTruckBiz is the home of the business growth and support system. The system simplifies your business so you can focus on what matters, which is what's going on in your trucks. The BGSS is made up of several tools that you can use to easily manage and grow your business so it becomes more profitable. In fact, clients that are already using it report that the system makes this ridiculously simple. The programs are supported by our business operations support software that ties everything together. And now, coming up very, very soon, a brand new application from eTruckBiz. We're going to introduce Easy Route featuring AI-powered route optimization. With Easy Route, you'll save time and money providing a state-of-the-art routing app for your drivers. You can make handling Network 2.0 easy for your drivers while you benefit from greater productivity. To get the business growth and support system, you go to eTruckBiz.com. You pick from a free budget and expense plan analysis, or just choose a free business consultation. Get on there, punch one of the buttons, get it scheduled, and you're on your way to beginning an easier life. An easier FedEx life, that's for sure. So to simplify your biz, either scan this code, go to that page, book your appointment with Becca, or just email Becca at eTruckBiz.com, and she'll get you set up to go. Okay, volume for week 51. Pickup stops on the vans remained steady, while the number of picked up packages rebounded a bit, so that's some good stuff there. On the delivery side, stops have begun to subside, and we are still about 1.2% ahead of last year. Packages definitely have started to decline from peak highs, but again, we're about 2.2% above where we were at last year, so all that's pretty good news. From a productivity standpoint, we started to take some dispatches off the road. Again, very good stuff, and this helped ease the stops per dispatch decline. We're still under last year's productivity levels due to some Network 2.0 in the results. We have a high percentage of clients already in Network 2.0. You'll want to note this decrease in peak productivity because of 2.0 when it comes time to renegotiate your contract. So keep that in mind. So in the news, FedEx announced their earnings last Thursday after the bell. Some of the highlights from the call were a 19% increase year over year adjusted earnings per share. That's some good stuff there if you're a shareholder. Revenue was up 7% year over year, surpassing Wall Street estimates of around $22.8 billion. Operating income grew by 17% to $1.6 billion, with the operating margin rising to 5.9%. For a company the size of FedEx and what they do and how capital intensive it is, that is very, very strong. They actually raised the lower end of the fiscal adjusted earnings per share range from $17.20 to $17.80. So they're pretty confident that things are going to keep going well. And some of the key drivers for the good earnings report, the strong performance was attributed to higher U.S. domestic and international package yields, continued cost reductions. That's what it's all about. And increased U.S. domestic package volume. So we'll see here in a minute, but they're going to start seeing some significant gains from the cost reductions, the Network 2.0 efforts. So your business partner is healthy and getting stronger as Network 2.0 shows tremendous promise along with other savings initiatives. So there was a Network 2.0 progress report during the earnings call. Currently, 5% now moves through the optimized facilities. they've successfully closed 150 mostly express facilities, streamlining operations for greater efficiency. So here's the thing right now about the timeline, how things are going. They report that, like we said, about 25% of the integration is complete. They are aiming for 40% completion by the end of May. Then that's pretty strong, but then they expect to be completely integrated by the end of 2027. So what does that all mean? So it took roughly 2 years to do the first 20-ish percent of the network. Now they expect to do another 15% in only 5 months. And then after that's done, then complete the remaining 55 to 60% inside of a year. That's a very aggressive schedule relative to what has already happened. It's okay. We have the experience and a couple hundred clients who've already ventured over into Network 2.0 land, and we have our finger on the pulse of how it's all been changing and what's going on. Don't worry, we've got your back on this. So it will be okay. We just have to make some changes, right? Okay, so we're just coming off a peak just before Christmas here. Hopefully you made some money during peak. That's really good stuff. But the question is, how do you hang on to it? So peak season volume has now subsided, but the real challenge lies ahead. Keeping the margins you've earned while managing upcoming dramatic swings in volume. The weeks following peak season will be critical in determining whether you keep or strategically utilize some of the money that you made at peak, or watch it disappear due to inefficiencies. The new year brings dramatic volume fluctuations, not just with FedEx, but in the logistics industry, with surges and drop-offs exceeding any other period. The holiday season, including Christmas and New Year's, creates the most significant volume swings of the year. So peak is one thing, building up to get into that huge peak volume, but then the bottom falls out, right? In the first week of January, service providers experience a massive decline in volume as holiday shipping concludes. This early drop can catch operations off guard if not properly planned for. However, a mini peak occurs in roughly mid-January, driven by returns and restocking, which also requires careful preparation to maintain efficiency. Understanding these seasonal patterns is critical to maintaining operational effectiveness, not just in January, but throughout the year. The challenge at this time of year is the same dilemma as there used to be pre-Network 2.0. The challenge is staffing to handle the peak demand and not contracting the operation when volume fluctuates or when the volume goes down. This has become more usual and doable with Saturday and Sunday operations, so we're more used to expanding and contracting the operations, but the wild volume fluctuations in January call for the same kind of thinking. So yes, there's going to be Saturdays and Sundays, and one day volume's up, and then the next day it's down. And when we're talking down, we're not talking down 10%, we're talking down big time. You just got to be ready for whatever's about to come, right? The key to protecting margins during post-peak volatility is maintaining high operational flexibility. Clearly communicate to your team that dispatch adjustments are driven by volume changes. You're going to have to adjust your dispatch based on what's going on with the volume. Transparency prevents confusion and maintains morale during fluctuations. Modern projections fail due to weather and external factors. So you're better off reviewing historical volume data and last year's operating plans and results for your specific CSA. This provides the most accurate dispatch forecasting. Rewarding peak effort with short days is tempting but costly. It's tough to, after peak, say, we're going to make some easy dispatches for a little while. That's your reward for working real hard during peak. Well, that's great. You can do that, but that's going to cost you a lot of money. Inefficient dispatching can erase peak season gains. And most of us at eTruckBiz have been in this game for a long time, and unfortunately, we see that happen. Either some of us struggle during peak, and we have those problems, but those of us that did okay just turn around the first 3-4 weeks of January and let it go because we don't expand and contract the operation based on what happens with the volume, right? This time of year demands premium planning and execution, not just relaxed standards. Post-peak is a window of opportunity, not just trying to survive and get by. Take advantage of reduced dispatches and peak earnings. Focus on fleet maintenance and comprehensive repairs. This is a great time if you can take a couple dispatches off the road to get some of your trucks that need attention, to get that sorely needed attention. Now, another thing that happens at this time of year is FedEx will be analyzing operations that struggled during peak. You want to position your company to acquire open work areas or portions of work areas as corrections are implemented. So things happen during peak. It didn't seem like a lot of people failed this peak, but there were problems for sure. Those don't go unnoticed. January is an optimal time to make operational changes, implement Biz IQ programs to drive superior performance throughout the coming year. These strategic investments during the post-peak period will set your company up for success in the next year and next peak season. Now is a great time to think about and implement some strategic investments in your business, whether it be growing or simplifying it via the eTruckBiz IQ programs. So if you want to do that, you want to get the BSS, you want to get the year off to a really good start, you want to get organized, you want to make it simple, you want to make some money, just scan this barcode, take you to eTruckBiz where you can make an appointment with Becca, or just email Becca directly at becca@etruckbiz.com and we'll get you going. So thank you very much.